7 crypto trading mistakes that are wrecking your portfolio. Bought crypto because Twitter said "to the moon," then panic sold during a dip? Let's fix that. These 7 mistakes cost new traders thousands. Let's make sure you're not one of them. Buying a coin just because it's trending is like marrying someone after one DM. You saw it on TikTok and Twitter was screaming 100x altcoin. So you ape in, then boom, price tanks. That's FOMO, fear of missing out. And it's a portfolio killer. The dangers of investing based on hype are real. Don't let social media dictate your financial decisions. Do your own research, DYOR, and understand the project. Never buy just because it's trending. Wait for price confirmation. Imagine a trader losing a significant portion of their portfolio. You went all in on one coin. Because YOLO, right? Then you're crying over 80% losses. Crypto is risky. Manage it. The importance of managing risk cannot be overstated. It's the key to long-term survival in the crypto market. Allocate a percentage of your portfolio to each trade. Never risk more than 1 to 2% of your capital on a single trade. Survive to trade another day. Stop losses protect against significant losses. You told yourself, "I'll sell if it drops." But you didn't. Now you're holding a 70% bag. No stop loss? No mercy from the market. Without a stop loss, you're essentially gambling. You're hoping the market will turn around, but hope is not a strategy. Always set a stop loss. Emotion has no place in exit decisions. Set stop loss orders to automatically sell your crypto. The dangers of constantly trading based on short-term fluctuations are significant. You're trading 6 times a day like a crypto squirrel on caffeine. Spoiler alert, more trades, more profits. You're constantly buying and selling, trying to time the market. But the market is unpredictable and you're likely to lose money in the long run. Develop a long-term investment strategy. Only trade clear setups. Quality and quantity. Patience pays. Avoid impulsive decisions. Warning, against taking financial advice without research. If your strategy is, "that guy on YouTube said buy," you're doing it wrong. Even influencers get wrecked. Don't copy, learn. They may have good intentions, but they're not financial advisors. They may be promoting a coin because they're being paid to do so. Verify information from multiple sources. Use them for inspiration, not instruction. Always validate with your own analysis. Make your own informed decisions. Emphasis. Importance of having a clear exit strategy. You bought, it pumped, you held, it dumped. You're still holding and praying. You're hoping the coin will eventually recover, but it may never happen. You're stuck holding a bag of worthless tokens. Set profit targets. Know when you'll take profit or cut losses before you enter the trade. Be prepared to sell when targets are met. Stress. Importance of only investing what you can afford to lose. Rent money in crypto? Bad idea. Crypto is a roller coaster, and you don't want to ride it with your life savings. You're putting yourself in a stressful situation. You're constantly worried about losing your money. This can lead to poor decision-making. Prioritize financial stability. Only invest what you're willing to lose. Treat it like tuition. Avoid putting yourself in a difficult situation. Which of these crypto trading mistakes have you made? Drop it below. We've all been there. Don't be ashamed to admit it. We're all learning. Next video, I'll show you 3 pro habits to make smarter crypto trades. These habits will help you avoid these mistakes and become a more successful trader. So, subscribe, and hit that bell so you don't miss it. Thanks for watching, and I'll see you in the next video.